And what's the buzz around India and other key matters?
I think when it comes to Davos, India team is a very strong contingent which has come, and it's a very strong representation which is being put up before the world community. So I think to that extent it's a very strong India story which is being talked about, and rightly so, because if we look around the globe, perhaps India is the only oasis where probably the kind of growth which is being seen. Of course, what you rightly indicated right in the very beginning, the inflation reigning and its likely impact, that of course is a global scenario. We are a part of the global community. But if we really analyze the inflation scenario in the country, essentially inflation is attributed to two major factors. One is inflation fueled by the crude oil, and second is the edible oil. You would have observed that in last 2 days, various measures have been taken by Government of India in terms of reducing the taxes on the petrol and diesel, and also it's also being talked about for the edible oil too. So I think to that extent, whatever is possible by a government, that is being attempted. The other very important feature which I must talk about is relating to the edible oil and the kind of restrictions which are there on the export of palm oil from Malaysia and Indonesia. They are being relaxed. So that will also lead to some kind of easing of situation as far as edible oils is concerned. But yes, of course, crude, I think we'll have to perhaps wait and watch for some more time. But nevertheless, efforts being put in by the government to reduce the taxes, etc., are very welcome. I'm sure it will lead to some kind of a easing effect as far as inflation is concerned in the economy.
Mr. Kara, because like you very correctly said, most of the inflation currently is supply side driven. But there is also the other bit about a liquidity overhang, and that being sort of reined in. And perhaps from all indications, what the RBI, the central bank, is telling us, a pre-COVID kind of interest rate environment is in the offing. For the general consumer, and the SBI, I perhaps need to add this here, runs one of the largest loan books in India. What is in it for the general consumer? Should he be prepared to fix his interest rate right now and opt out of floating rates? Just as an example, I know everything is floating now mostly.
Yeah. No, I think, well, of course, the RBI policy rate went up by about 40 basis point mid-term, and which has actually led it to 4.40, and pre-pandemic it was at 5.15. If that is the kind of a number, I'm sure RBI will be looking at various other numbers also before they take a final call. So I think that seems to be the outer boundary as of now. But nevertheless, as far as the retail consumers are concerned, you know what it means for the retail consumers. It will be of course, banks will try to pass it on to the extent possible wherever there is a floating rate of interest, and of course when the interest rates are on the downward track, majority of the retail consumers had opted for the floating rate interest. So that is a reality, and on the upswing, of course, it hits. But nevertheless, I think it is also a function of the excess liquidity which is there with the system, and each of the bank will probably try to calibrate the risk premium also, keeping in mind the excess liquidity which they have. So to what extent they will be in a position to pass it on and how much they would like to pass it on will be a function of the decision taken by the various ALCOs in different banks.
Mr. Kara,